Today, this is your day. You've got a window. You've got another 20. We'll be talking about risk management. How to apply proper risk management today on futures and also on CFDs, Forex. I want to be sure that everybody on this call can see me and everybody can hear me. Checking the mic to be sure people can see me, people can hear me. Okay, I'm seeing the chat box. Those of on Zoom, everybody say yes, let's go. Okay, thank you. Can't hear you. Paul, you are not supposed to be in this class. Who is Paul? Paul, kindly exit from this class and join the YouTube. Go to YouTube at James Ochima. People are there in that YouTube. Go and join us from YouTube. This class is a paid session for people like Alhaji Zamfara, Ebelele, Uba. Paul, you are not supposed to be here. Okpara, all of them, they are my students. You are not part of us. Please look for a way to get out of this call very soon before I get angry. With that being said, all the other students are already here except Paul. Paul, you are not part of us. Please kindly exit from this call. Join us on YouTube for free. Thank you. All right, so I'm sure everybody can see my screen. I'm sure everyone can see my screen, right? Why is it that my chat box is... Sorry, just 1 minute. I need to allow this share. Just a moment. I need to allow video panel. Yep. Perfect. 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 Yesterday, we were looking into how to place a trade on MetaTrader 5, MetaTrader 4. Day before yesterday, we were looking at how to place a trade on MEXC exchange. Today, we are going to focus on risk management. How to apply proper risk management on futures trading MEXC exchange and also on Forex trading MT4, MT5. Of course, you now know that this is the platform of MEXC exchange for trading. And this platform allows you to search for any pairs you want to trade on the futures side under USDT and futures. You can see them right here. Then it permits you also to go to the right-hand side to select the leverage, whether isolated or cross margin, of which we all agree that we are going to stay on isolated margin. Confirm. It also permits you to go down to your leverage and choose what leverage you will use, which determines the risk management. This is what we'll be discussing today. This is part of what we'll be discussing today. Permit me to leave it at 10x leverage. Confirm. Then let's go further to show that it permits you to use limit order, which is a pending order, market order. This trigger price is also a pending order, but let's stay with market order. Market order, instant execution. It permits you to select the quantity you want to purchase before you go in. It permits you also to select take profits and stop loss for long position, or take profits and stop loss for short position, as the case may be. Before you pull the trigger, either open long, which is buy, or open short, which is same as sell. Ladies and gentlemen, having gone through all the rudiments of how to place the trade, the next thing we must understand, in fact, I think we need to understand it before we even place the trade, is the risk management. How much capital do you have before you open that position? It's not about telling me that the position is a good position, it's going in profit. How much capital do you have, liquidity, enough to hold that position before the position goes on a buy? Of course, we know we are in the bull run. All cryptos are rising, especially those which have good use case. But at what point would that rise? How far would their drawdown be? That is a question of how much liquidity you have. Somebody can be in a Bitcoin buy position, while this Bitcoin buy position is not really playing out on the futures right now because the market is undergoing a pullback. But because that person have enough liquidity to hold the market, he's not going to be in loss. It's only going to be a little drawdown, and then he's going to bounce back again and continue moving upward in profits. So it's a question of how much you have versus how much risk you are going to take per time. So in a situation, case study, where we have, in a situation where we have an account balance of $1,000, for me, this is an ideal situation to trade the market, an account balance of $1,000. So I will even advise so many people, if not everyone, to ensure that they practice with a $1,000 account. The MEXC exchange permits you to create a demo account. If you go to features, under features, you see M features, M coin, copy trading, demo trading. The MEXC exchange permits traders to create a demo account. Even professional traders use demo accounts. So nobody is bigger or too big to experiment. All scientists, no matter how big or small, they experiment. Demo account is a place where you do experiments. So I advise, part of risk management, number one, that you should test run whatever you want to do on a demo account. If you have not test run what you want to do, if you have not experimented it, then do not hope, do not expect. You only put expectation when it's no longer an experiment. When it is an experiment, you take whatever you see and you learn from it. But when it's no longer an experiment, it's now a knowing. Then at that point, you are expecting a particular outcome and you are hoping that we have a high hope that that outcome is going to play out. So I advise and I strongly recommend as number one risk management factor that every trader should employ the use of demo accounts. So in MEXC, after creating a demo account, I also encourage strongly that you come to this place where they ask you claim demo account amount. You claim as much as $1,000. It's free. Demo account is free. You are not paying a dime to have a demo account. You are not doing anything serious. You don't have to pay anything or fulfill any righteousness to get a demo account. Demo account is free to access. So with that, I'll move to the next step in risk management. After having that account, the next thing is to experiment what you want to do. Let's say, for instance, we have a market situation like the previous one I see here. Let me look at Ethereum. What is happening in Ethereum? We have a market situation in Ethereum. No, this is not a good market situation. I'll skip it further. I'm going to H4 to look for an engulfing, and I'll use that as my market situation for buying. I will go to Solana. If I go to Solana, I see I don't have a good market situation. I go again down to, after Solana, the next one is Doge. I go to Doge. I don't find a good market situation. I'm looking for an engulfing, H4 engulfing. I go to the next one, Ripple. In Ripple, I did not find any good market situation. I go to the next one, let's say SUI. SUI, I have a very fantastic market condition where we have an engulfing currently going on. If you look backward behind the engulfing candle, you will see clearly what we talked about which is rejection area, former support zone, is aligned with the area where we have the engulfing candle, which makes our next position, which makes our next candle an area of entry, and which makes our target visible, which is the next resistance, which is around this zone. But then this is not a good risk to reward ratio, but however, we want to take this trade regardless. We want to take this trade regardless. Some other traders will want for this price to pull back to a very good discount level around this zone here, 3.9271, before they look for a buy entry on smaller time frame, which is called filtering of entry. Right now, based on H4, we are bullish on SUI USDT. But the next thing we need is to filter the entry down to 30 minutes time frame, down to 15 minutes time frame. It is important for risk management. When you have a good entry setup, like what we have right now, is a very good entry setup based off on support area, rejection here, bullish engulfing here, is a good setup, but we needed the price to come down to discount level. If the price comes down to discount level OTE area and we find an entry on a smaller time frame, then it is a fantastic entry. That is risk management. That is risk management. So assuming this is the situation we have, we want to pull this trigger right now. I am going to proceed to check the risk. This one now is part of risk management called money management. Now that is market execution. Then stop loss will be under the support area here, which is, let me drag this down to stop loss so we can see. Stop loss would be this area here, 3.384. So I'm going long. I click on the long button. Stop loss is 3.384. That is where the stop loss of this movement should be. Meaning that if price comes there and close below that line, that bullish move is no longer valid, it's invalid. So that is where we've set a stop loss. Then the take profit is this resistance level here, this final rejection that we have here from the resistance zone, which is 5.09. So we'll put the stop take profit as 5.09. When we set the take profit, we set the stop loss, then we go again now back to the quantity. Whenever we drag the quantity, it will show us the money. It will show us the money. How much are we going to make with using 5% quantity? We are going to be making $71 USDT if the trade works out well. If the trade doesn't work out well, we are going to lose 119. This is not a good bet, but I understand why it's like that. Is because our entry is at premium level. That's why it's like that. So I think I will just ignore or cancel this position. I will go and look for another position so I can give another example with something better. Let me look for SHIB. Shiba, there is no good market situation in Shiba. Let me look for Bone. Bone has a very good market situation. I'm going to go over with Bone. I'm going to scroll down to see where is the support that Bone is, where is the support level we're going to use to as our area of interest, or what's it called again, trade level, or yeah, range, our trading range. Thank you. Our trading range has been selected from down to up. We don't need this one. Maybe we can mark this one as TP1, maybe. But it's really not necessary because the most significant TP1 is 0.7. And then the support base is here. And what we have right here is OTE area. So we have a nice OTE area. Support is here, which is our stop loss area at this point. Maybe I can bring it down a little bit to give it breathing space. So our stop loss is 0.321. Our stop loss, we are going long. Our stop loss is 0.321. Then our take profit is far away. Forget about this guy. We're not using this. so you can really understand risk management. We are going to all the way to the resistance level here, 0.733. Our take profit is 0.733. So let's check the quantity now. Our leverage is 10x. Why are we using 10x? 10x is good for $1,000, right? We will go and manipulate that 10x later on so that you can see something. So let me bring this down. Let me begin to drag this quantity now. If we use 5% quantity, it's telling us that we are going to make $266 if this trade goes all the way to TP. What if it doesn't work? We are going to lose $154. Well, this looks like a little bit good trade. It looks like a little bit good trade, even though the best should have been maybe from here. If we enter from here, it would have been more better. That is to say, if we enter that trade from here, if this was our entry, if we pull back and enter from here, limit order, it will be more better. Risk reward ratio should take us to the upside. But anyway, it's still a good risk. We are trying to make $267 and we are risking $153. So you have to ask yourself the question, are you willing to lose $153 from $1,000? Where's my capital? $1,000. The answer is no. $153, it means 15% of your capital. Is a very bad risk management, money management. It's a very bad money management. So you must bring down your risk per trade to 2% of your account. Every single trade. Calculator, what is 2% of $1,000? What is 2% times $1,000? Okay, I have 1,007, right? 2% of 1,007 is $20. The best kind of risk management, or a very good risk management, proper risk management, that is the right word. Proper risk management requires that we should be risking not more than 2% of our capital for each position. Today, I heard a story that I didn't really like. Somebody was telling me how that he blew his account. I heard that story. I didn't really like that story. It was sad, and I felt like crying. And I wanted that person to be part of this class, but unfortunately, the person did not pay for master class. So I advised the person to wait on YouTube to watch the class over, so we can be able to carry them through. Thank you. All right, so that person did not apply proper risk management. That's why the person lost his account. Trying to make so much money with a little capital, it doesn't make sense. Risk management, or proper risk management, requires that you should risk not more than 2% of your account per each position you are taking. Some traders even say per day. Some traders say total open position to be 2% risk. So if you are risking total open position 2% risk, that means $20 on this 1K. Then you have to risk $10 per each open position. You have to risk $10 per each open position. So you can take 2 positions. And that is what we are going to do right here. We are going to risk $10 for each open position. We are taking the first position right now, and we are risking $10 for this position. So how do we risk $10 for this position? We have set the stop loss. We have said the stop loss is here, the take profit is here. So we go down, we go here, and we manipulate this place. We come down here and we change this leverage down to 5x. We have not even pulled our trigger yet. We are manipulating the leverage. We are manipulating the quantity to get the proper risk management. We have accepted that 2% of $1,000 is $20. Therefore, we're going to risk $10 for each one position. So we now reduce the leverage. Now we have the quantity is down. The quantity is telling us that we are still risking $75 if this trade goes bad to our stop loss. So we must have set the stop loss. We must have set the take profit before we start manipulating leverage and quantity to get the proper risk management. 1% risk per position, 1% risk per position, 2 position, maximum 2% risk. That's the total open trade we have. We will not add another position until those 2 positions are removed or one of the positions is out. And we will not add the position another trade if we lost any position. We will not add on a losing trade. When we lose for that day, we will not trade again till the next day. It's part of risk management. It means that something is wrong either with the analysis or with the market. So we can't continue. We are building on a foundation that is not solid. If we win in one of the trade, we win in the second trade, we find another position, we can load on that position. But there should be a particular target that we should not go more than that trade. Let's say if we win our first trade, we win our second trade, we load another one, we win the third trade, we load another one, we win the fourth trade. We should put a barrier, say if we win 5 times in a day, we will not trade again. It's enough. We must set that rule. It's important for money management. And we must also set a rule, say, okay, we open 2 positions. The first position is stop loss. We open another position that is a counter position. The counter position hits stop loss. Don't open on that trade again. When you lose 2 trades in a row in a day, don't open the third one. So that rule must be there. And you are permitted every day to open 2 positions. You must set those kind of rules. So back again to the chart, they are telling us that we are risking $76. It's not acceptable. So we'll go down to the quantity and say maybe 3% quantity. Let's see, what do we have? We are still risking $45. It's still not acceptable. So we go down again to the isolated margin and go and reduce this margin down to maybe 2x and confirm it. So reducing down to 2x is telling me that we are now risking $18. It's almost there, but not acceptable. So we'll still go down again. We can go here and put leverage as 1. Doesn't matter. And then go back here and allow the quantity to see what we have on the quantity. We are risking $9. We are risking $9. So we can go now again and increase it to 4%. Okay, I think I'll go with 4%. It's telling me I'm risking $12. It doesn't matter. And then the profit is estimated at $20. We are risking $12 to get $20. It doesn't make sense. We are supposed to be getting $24 now. That's 1:2. That's a minimum risk reward ratio. So if we reduce this risk to this level and execute this trade on a long, they are allowing us to go in for a long. Boom, we are in that market. We are in already. So we have one of the best, not really the very, very best, because of risk. The reward is not twice the risk. So it's not the best kind of trade that we can take. But then at least it's a good risk management. That's what I'm trying to say. That we are risking 2% and we are risking 1% and we are targeting 2%. We are risking 1% of our account and we are targeting 2% profit on this trade. So this is proper risk management. This is proper risk management. You can increase your risk management, but it will also increase your exposure and also increase your potential losses if the trade goes bad. So let's look for another position again and experiment proper risk management as it were, as we've explained. So let's see TRX USDT if we have a good case to enter a position here. We don't have a good case. There's no bullish engulfing here. I will not be comfortable entering that position. Then let me see Link. Link is one of those I wanted to enter the other time, but when I check the stop loss, it's far away. No, I think we can go with Link. We can go with Link. If we have a bullish engulfing there, we can go with Link. It doesn't matter. So our stop loss is going to be here, 19.36. 19. But the problem with link, okay, there's no problem. I'm seeing 1.31%. 19.36 is our stop loss. So I'll go here, opening long position. 19.36. Then my take profit is here, which is 31.08. 31.08. Then I'll check the risks now. If I am opening the quantity, yep. I'm dragging. Aha. Here in this case, you see, I'm risking $11 and I'm targeting $26. This is much better. See, that is why it's not good to load all your position in one trade. You can load it in multiple positions and it's much better for you. The other one, the risk reward ratio did not permit me to make so much in terms of potential profit. But in this one, the risk reward ratio permits me to make more. I'm going to be making $26, and if it doesn't work well, I'm going to be losing $11, which makes a whole lot of sense to me. At the end of the day, I'm risking around $20 to target around $40 or $50 in this position, if the position goes well. So, ladies and gentlemen, this is what risk management looks like, and this is what risk management is supposed to be. So if you are trading like this, you will not be in a panic. If you are trading like this, how many trades will you require to lose 10% of your account? It will require you 5 losing strings back to back, doing the wrong thing 5 times. So 2 for, okay, if you are using 1% per position, it will take you 10 positions before you lose 10% of your account. And this is the best thing I think traders should do, especially beginners trader. You have to allow yourself to take more trades following the same strategy, the same risk management, the same kind of risk reward ratio, the same kind of entry, the same kind of setup, following several of those trades that appear to you. And you are able to take 10 different positions at different times altogether within a week, within a month. At the end of that position, if all the trades go to stop loss, you have only lost 10% of your account. So if you funded $1,000, you are left with $900. Then you withdraw the $900 and go home. When I say go home, I mean change whatever you are doing, because it obviously means that the market is not your friend or your strategy is not good enough. You need to go and work on your strategy and come back again. Or you need to leave that market and go to another market. If it was a Forex market, leave it and face crypto. It was the crypto market that did that thing to you, leave it and face Forex. So how long will you take, or how long will it take you to execute 10 positions? Me, I think it should take you around 1 month to execute 10 positions. If it takes you around 1 month to execute 10 positions, in this particular case study that we are currently watching, let's say each one position gives you $20 and you have taken 10 positions. Let's now say, I'm sure everybody see what we have done. So I think we are now in a place where we can use our calculator, right? Calculator. Let's say we are in a situation whereby we are taking one position like this case study we have right now. One position is giving us $20 averagely, right? So every one position we make $20. Every one position we make $20 in a good trade. Let's say we got all our 10 positions correctly, times 10, that gives us $200 in a month. So we have an account balance of $1,000 intact. We have extra $200 at the end of the month. This is good risk reward ratio. This is good risk management. This is good money management by any standard whatsoever. In fact, 20% is excellent. We have very rare cases where traders will do 20%, because this is actually 20% of $1,000. So your monthly percentage should be around 5 to 10% of your capital. Yes, if you are maintaining proper risk management. Now, don't get me wrong. Futures trading permits you to go on a higher risk because of the leverage they supply us. Futures trading permits you to risk far above overboard. But that is for traders who know what they are doing. That's for people who accept that risk, not for somebody who doesn't know that that is how it works. Like the guy that called this morning, he didn't call me, he called one of my friends, and my friend sent me the message that look at what somebody is telling him. That guy is not aware that this is his exposure. He was only aware after he blew the account. So somebody like that needs to watch this video and learn that as a beginner, your goal is to execute 10 positions, properly analyze long-term good entries, find 10 of those positions within a month, execute them. Inside 10 positions, each of those positions should give you around $20 averagely. Let's say you win 5, you lose 5. That would be 20 times 5. That gives us $100. That you win 5. Let's say you lose 5. For each one you lose is $10. So 10 times 5. You lose 5 position. What you lost in total is $50. You win 5 position. What you won in total is $100. At the end of the day, you are still up in that month. You are up by 5%. You are up by 5% monthly, which makes a whole lot of sense. Now, this thing I'm saying, as simple as it sounds, as easy as it looks, it is the most difficult discipline of a trader, a day trader. To focus and follow the rudiments of risk management to get to this point. Yes. But yet we have done it several times, countless times. We can prove it to you so many times. Yesterday, I showed you this particular account where we automate a system, and that system continuously every day following the same risk management, the same model, the same structure that we designed on it. And as of today, we are up 72. We are up 72 as of today. Open position, oh yes, we have open position, which is an minus 0.3 open position. Total open position, oh yes, on GTC broker. If you go and backdate this trade, you will also see that the risk management is still being maintained, from the lot size to the position sizing to the losses and the profits, and then to the growth of the account. The risk management is well maintained, followed, and managed properly. We are doing it. But before we started doing something like this, it took us months and years and experience, good and bad, before we got to where we are. Right now, if you can see this particular account I showed you yesterday, it was around 1,100, which was total was 11,400. Right now, we're talking about 11,574, which is total profit of 1,234. And if I can check clearly, I think the date where we started this account, if I can see that date we started this account, it should be 1 month plus some few days right now. So which is 12%. So if an account is doing 5% in a month, it's a healthy account. If an account is doing 5% in a month, it's a very healthy account. As a matter of fact, we have several cases where accounts are doing 2% in a month, which we also consider as healthy growth in terms of risk management. We also consider as healthy growth in terms of risk management. This is yesterday we took this position. AUD NZD, if you remember, this is the position AUD NZD we took yesterday, and the position is still on, is still going on. Let me see where we are. I'm not seeing all the full information of this position. Just a moment, please. Just a moment, please. Just a moment, please. I think there is something working on the app. The app is not apping well. Let me quit it and open it again. Just a moment, please. Just a moment, please. I'm trying to get back the app again, MT5. So I think I can take questions now. If there are any questions from your side, so far so good, I would appreciate to take questions, please. If there are any questions from your side, I will appreciate the questions, please. Oh, I'm seeing MT5, the main dashboard. Is that what I really want now? Anyways, let me still show you that one. But anyway, we took some trade yesterday, and I want to show you what is happening with that trade and probably talk about risk management on that trade. Okay, let me try again. I'm looking for AUD NZD. Here we are. So let me open it. Then I'm looking for H4 time frame. We are there. Then I'm looking to shrink my screen. Yesterday, we marked the highest point of the price as this place for AUD NZD. Yesterday, if you remember. Then we also marked the lowest point of the price as this place. If you remember, this zone. Sorry. And we said it's not straight, right? This was where I was drawing. Somebody say I should use horizontal line because that line is not straight. I don't like to use that horizontal line. So this is that thing I was looking for that I did not see. Here is it now. So we said that we are most interested about the most recent movement in the market. We are not interested about the previous movements. We're interested about the most recent. If price started from here, we expect that the price, let me use blue, sorry, please. We expect that the price that started from here will go all the way to here. And we have also seen that before it did this movement, it actually started from here. It went up. It came down. It came down, but not as low as where it started from. It went up, stopped here. That means it went above this place. This place is called resistance. It broke resistance and went up. When coming down, it did not come down as low as this second level of support. This is support S2. This support S1 in terms of pivot points. When it was coming down, we did not even regard this one because it's not a strong pullback. It came down and stopped around this same area where we have a resistance, a former resistance zone. So you drop down to resistance zone there. It now form a bullish engulfing there. It now take off to the top side. On his way going to the top, he broke this previous resistance. He broke it. He broke its previous resistance. He came back, tested it, bullish engulfing, broke it proper. He came back again and entered. It was at this zone, after the breaking of this side, that we decided that we are going up. And when we decided that we are going up from this zone here, we said that anything below this engulfing, we will no longer enter our trade again. That engulfing becomes our SL. If you remember yesterday, this engulfing was one of our strong reasons why we wanted to take this position. So anything that crosses below that engulfing, we are out, SL, out of the game. So we take our entry from anywhere. So we say we wanted the price to come down a little before we enter. We see now a bullish engulfing H4, so it's the best time to enter. But today is Friday. So entering today on Friday at this time of the night, how does it make sense? It doesn't still make sense in terms of what's it called now? Session of trading. Yesterday, I mentioned in passing, as the session of trading starts from 10 a.m. London, 2 p.m. New York, then 11:30 Asia. But then also remember, Friday, end of week. So it's not a good time to look for open position. So your open position must be seen at the time of execution, at the prime time of execution. So that is the best time you want to look for a position. Usually Asia, Asian session, no, usually London session or New York session, usually. So that also have to be part of your risk management plan, that you are not going to open a position during the weekend. We are going for a weekend and you are opening a position. But those who already opened a position, they started opening that position after bullish engulfing from here. They entered from here. And after they entered from here, they are all in this move. They are all in this pullback. They are all again in this move. They are still in a pullback. They are going all the way to the top here. So you that is joining from here, you have to be patient, wait on Monday morning, then you jump into a buy, because we see an engulfing already here on H4. And after the engulfing, we expect that price is going to move, being the reason that that engulfing will hold the price. But of course, you know, the move did not start from this engulfing that happened here right now, today. Engulfing happened here today. That's a sign to enter that particular asset. But you need to know that this engulfing is not the beginning of this trade. The beginning of this trade is from the trading range, which is the home. Remember, the home. And then the target of this trade is the away. Then this place is the middle line. In fact, the middle line is actually this resistance here. So not this one, please. So we're actually taking the trade from the middle. So in terms of PD array, anyway, all this area is middle. So in terms of PD array means premium discount array. Sorry, premium discount. PD array. Array means line up. So in terms of line up of premium discount, this is not a very good place to start taking a trade. Not that it will not work, but the risk of taking the trade here is high. Because if we take the trade here, the best stop loss to use is under this place here, SL. And then the best take profit to be using is this one, TP here. So you now see the distance between your entry versus your take profits. The distance between your take profits, your entry versus your SL. So you see the equal distance, like 50-50. So that is what we call risk-reward ratio. You don't want that. Otherwise, you are going to use a hard stop loss. A hard stop loss. What is a hard stop loss? If you are entering from here, you are going to use this support as this place as your support. So this is going to be your SL as your base. Then this is going to be your entry. Then your target will be, this place is actually one of the targets too, but then let's just be civil. Let's allow the poor breathe. Let's take it to the upside, swing. Let's swing it to the upside, which is possible. So in this case, You now have the distance between your entry and your stop and your take profit. This is your take profit. You can see how wide that distance is. It's a big probability. Then you look at the distance between your entry and your stop loss. You see, it's a small distance. And your stop loss is a proper stop loss because there's a support there. The proper one. So what am I saying here? I'm saying that if this is one portion, this will give you about 2.5 portion, 2.5. So we now say our risk reward ratio is 1:2, 2.5. So this is a good kind of risk reward ratio. And this is the trade I took. This is the entry I made. So for the purpose of swing, forgive me, I'm going to take this trade again just to show you risk management. Even though I said it's not good to take a trade on Friday on the Forex because market has closed. Market is about to close and you are looking for opening position. So under the trade session here on MetaTrader 5, you see the account balance. Here we have an account balance of 29,525. So we will go to our calculator. We'll just say 29,500. Calculator. What is 2%? I'm only taking one position, so I'm not looking for another position, please. Calculator, what is 2% of 29,500? So 2% times 29,500. 2% of 29,500 is $590. So I am going to risk $590, and that is going to be my risk. I'm going to risk $590 on this trade. So if I want to risk $590 on this trade, what loss size should I use? This is where the risk calculation is. What loss size should I use? What loss size should I use? Each one lot size, one standard lot size, okay, we have to count the pip first of all, before I say what I want to say. I don't want anybody to be confused. Don't be confused. You know, we are not talking about Forex now. That of Mexi, you can see it was quite easier. Here, we need to do some calculation. I need to check from my entry to my stop loss. How many points? 36 points. Look at that thing, we see 366. That's 36 pips, 366 points. 366 points means 36 pips. But I'm comfortable with 50 pips. So let me drag it down. 45 pips. I'm comfortable with 50 pips. In Forex, I'm always comfortable with 50 pips. As a new trader, as a beginner trader that will observe proper risk management, we are comfortable with 50 pips as our stop loss to give it more breathing space so that the trade don't go and hit our stop loss and still be going our direction. So if we are doing 50 pips stop loss on AUD USD, that stop loss will be at 1.101. 1.101. Let me bring the horizontal line. 1.101. Let me edit this line. Properties of the line. Parameters. 1.101. Let me make its whole number. 1.10100. That's our 50 pip stop loss. That's our 50 pip stop loss area. Then our entry is right here. Our entry is right here. Our take profits will be from here. No, I don't need to calculate the take profit since we're entering. I just want to calculate our stop loss. Our stop loss is 50 pips down to this place. So for each 10 pips on one standard lot is like this, 1.0. 1.0. This is one full standard lot. If we enter a buy right now. So if for each one standard lot, and we do 10 pips from entry down to 10 pips, we are losing $10. Each one pip is $1. Each one pip is $1. Each one, if we do 10 pips, that's $10. If we do 50 pips, that's $50. So that is a flat rate calculation. So if we have 50 pips from that starting point to this place using 1.0 lot size, we'll be losing $50. And here we have done a calculation and say we want to lose $590. If one standard lot will give us a loss of $50 for, what am I saying? What am I saying? What am I saying? What am I saying? One standard lot times 10 cost of a pip times 50. I beg your pardon, it's not $50. That's the calculation. I'm so sorry, guys. I think I said something else. This will give us $500. I beg your pardon, please. I beg your pardon, please. This is the exact calculation. You will see it being simplified when I open the position, but I want you to see the arithmetic behind it before I open the position. In MEXC, you will see the position, you will see it's already calculated before you open the position. But here you have to open the position on MT5 before you see the numbers. So this is averagely one standard lot size, pips per lot, $10 per pip, SL, $50. This will give us $500, which is what we want to risk. There's also a calculator that can calculate risk. So don't too bother yourself. So we are going to use one standard lot. We'll open the buy position. So, I didn't hear the sound. It didn't enter. So I enter the position right now. And when you enter the position, you click on the position, you drag it down. You will see the price. You see the cost. As I'm clicking and dragging, you see I drag it down to 50 pips. I'm seeing $315, which is even less than what I expect. And the reason is less is because of this pair. This pair is a cheap pair. Usually GBP USD is a normal one. So 50 pips on this pair is showing me that we are risking far less than what we expect, less than 2%. Let me touch it again. If I click on it to drag it, you see the price. Why is it difficult today? Let me use a laptop instead of the mouse there. Yeah, look at it. Look at the left-hand side, you see the price. You see the cost of that SL on the left-hand side. $332. That's the cost of that SL. Look at it there. Why is this thing disappearing? It's not allowing me to. Minus 331 in dollars. This is about 58 pips. And it's still not 500. So we're okay. So you click on the price, you drag it to where we are going for take profits. You should see cost of, this one is 500. Let me drop it here and drag this down so you can see what I'm looking for. If you look to your left-hand side where we have the line, I mean here, be looking at this place, be looking at this place. So let me drag it. Let me drag it here so you can even see it here. To get that line, it's not easy on my laptop. Let me drag it down so we can find it very well. To click and drag that line today on my laptop is not easy. I don't know why. I think maybe this, I need to update the MT5 I'm using. It's supposed to be much easier than this, but then permit me to drag with it. So right, me, I can drag it to 600, right? 600 makes sense. So the target is $600.
Hello, guys. Is the lecture closed for the day? Because it seems like his network is very bad.
It seems Mr. James Oshima is not online again. Maybe his network at the area where he is very bad. I don't know. I can't get. He is not even online.
Yes, exactly. Maybe we call it a day, or we we left and rejoin again to see if he's not there. We call it a day. because it's almost time before the network starts.
Can anyone reach him? Let's know our fate here now. Can anyone reach him? He's not online. I'm trying to chat him. He's not responding yet. I don't know if anyone can reach him. He just left. I don't know whether he has a power failure or something else.